Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Hey, good afternoon. Thank you so much for joining us today on Tampa Home Talk. I'm your host, Katrina Madewell, and we have a great show lined up for you this week, right on time, like always. So if you are in and around pretty much really any place in the state of Florida, we happen to be doing the show from Pinellas County. So we have invited in this week the property tax appraiser for Pinellas County, but a lot of this information will apply for various counties throughout the state. And so the topic for this week's show is frequently asked questions regarding your tax trim notice and other real estate property tax questions. And so I can't think of anybody better than to bring in and talk about this topic with us other than Pam Dubov, Pinellas County property appraiser. Thanks for joining us.
Happy to be here. Thanks for asking me.
Now, you've got a pretty extensive background. You have been really just with the county and sort of in and around this industry for 26 years. Is that what you told me?
Yep, 26 years.
So how did you start 26 years ago? How and where did you start with the county?
I actually started in Hillsborough County for a year, working on trying to help modernize the office. And in my incredible sense of good timing, I joined the office when the incumbent already had 2 or 3 declared opponents for an upcoming election. So I wasn't there for very long. The next year I came over here to Pinellas County, where I was managing the information systems department for the property appraiser, and then worked my way through the ranks till 2008 when I was elected to be the property appraiser myself.
So since 2008, you've been Pinellas County property appraiser.
Right.
And this is the time of year, like 'tis the season, if you will, that your office goes crazy with some of these frequently asked questions. Some of these we're going to talk about today. And, a lot of people kind of look at this notice funny when they get it because they're like, what is this trim notice? It's a bill. It says do not pay. This is not a bill. And they look at it like it's sort of like a bill, but it's not really a bill. And so we'll talk about a few of these different things. But one of the things that I want to touch on, and we'll remind this and mention it at various times throughout the show, is property taxes are paid in arrears. So that means for the entire year that's already passed, you're going to get the tax bill for the year that's actually preceding, which you get an early discount if you pay it in November.
That's true. What happens is we appraise property in Florida, and this is all through Florida, not just here in Pinellas County, with an appraisal date of January 1st. So by the time people get their notice of proposed property taxes, which is called the trim notice, in August, we've had 7 or 8 months of ownership changes. We've had 7 or 8 months of changes in the real estate market. Sometimes it's rising, sometimes it's falling.
To be good, bad, indifferent. You never know what you're going to get.
So folks who get the notice in August may look at sales that are taking place in their neighborhood that very week or that month and wonder why we seem to be so higher or lower. And a lot of it has to do with the fact that the year's activity is not really included in the notice they just received. We're actually looking at the sales from the previous year when we prepare our values.
So someone, and we're probably jumping a little bit ahead, but if someone were to, for example, pull a permit to update a kitchen or a bathroom or do something that would make some significant improvements, you're saying that if by January 1st, if that's not done, it's not going to be reflective in that year's tax bill?
That's exactly right. In fact, it goes even further than that. You could have someone building a brand new house, and if it's not complete on January 1st and they can't move in till February 1st, they get a certificate of occupancy.
Excellent point.
They basically get to live in that house that whole first year without paying taxes on it. It's not picked up till the next January 1st.
They'll pay taxes, but it will be based on the lot.
It'll be on
the lot
only.
Not the improved house.
Right. It won't be the value of improvement won't be included. But there's a downside of that.
Yes.
For example, this isn't such a big thing right now in Pinellas County because we didn't get hit as hard as Pasco, but I know a lot of your viewing audiences from Pasco
Yes,
County.
because we air over there at WDCF, WZHR, so two of our stations are going to be picking up the same show.
So there might be folks in Pasco County today who are getting a truth and millage notice, or got it in the last week or two on a house that's been flooded for days and days and days. Damage that's caused by that flooding didn't exist on January 1st of 2015. And just as you can have part of a year where you don't pay taxes on an improvement, you really don't get any relief from damage that occurs after January 1st either.
So the following year, would they see a little bit of benefit to that? Like I have a customer right now that, they paid cash for a house, didn't get the flood insurance. It's an AE, completely totaled. I mean, it's a total loss as far as the flood. They could literally ride a canoe through the house.
Well, what'll happen, and I don't want to speak for my friend Mike Wells, who's the property appraiser.
But this is hypothetical.
Sure. But under Florida law, let's say they had damage to the house and things dry out and they rebuild the new house by January 1st.
January 1st.
What was taxed and for the 2015 tax bill, what was there on January 1st of 2015, and if there's a whole new replacement by January 1st of 2016, it will reflect that. But if that, let's say they have to demolish the house, mold starts growing in it, and they have to take it down to the ground. If the house is not finished on January 1st of 2016, then the improvement, the building, should come off the tax roll.
So we're going to talk about that, but before we jump ahead, because I have more questions that are spiraling from that. But just back up to what is a trim notice? Like, what does trim stand for? How do they get that? Like, what does trim notice come from?
Well, it's kind of funny. We call it a trim notice, and it stands for truth in millage.
Okay.
Because it's supposed to provide a taxpayer with information about who is affecting how much they pay in taxes, either because they're an entity that's responsible for the tax rate and the resulting spending of the budgeted tax dollars. That would be your taxing authorities. Or
because there can be significant changes from one year to the next.
There can be. But there's also the part that the property appraiser is responsible for, which is the values that ought to be reflective of market. But the days when market value tells us what's on your trim notice are long gone, because we now have the Save Our Homes cap. We have the cap on non-homestead property that's 10%. We have a whole bunch of different property taxes exemptions, and they don't all apply to every taxing authority. So what used to be very simple 26 years ago when I started in this has turned into a much more complicated notice. But essentially what this is supposed to do is...
We're going to talk about some of those exemptions a little bit later, too.
Sure. It's supposed to let folks know which taxing authority is going to receive how much of their tax bill, how much of their tax bill is being paid to their county, to their city if they're in city boundary area, how much of it goes to Southwest Florida Water Management District. In Pinellas County, we have a board called the Juvenile Welfare Board, so they can see how their taxes are divvied up between the different taxing authorities. And on the far right of the Pinellas County notice, and the formats vary a little bit from county to county as long as they comply with certain general requirements. There's in very big print, it says, please see the reverse side of this notice for hearing dates. And what those are, those inform property owners when the different taxing authorities will have hearings about their budget if that property owner wants to voice an opinion about they should fund this or not fund that. And be honest with you,
because there's always columns that say if proposed budget is made, if nothing's changed.
Right. And the interesting thing is, for all the years I've been in counties going to these budget hearings, the vast majority of people that I've seen, when there's been big crowds, it hasn't been because of the taxes going up or values going up, although there's always people who have comments to make about that. There's been a multitude of people who want the taxing authority to fund a certain thing, or they're saying it's okay with us if you increase the millage in this area because we want this service. That happened several years ago in the unincorporated area of the county when a whole bunch of people from different youth sports leagues came in and said, we want the playgrounds and the parks and stuff in the unincorporated part of the county to help provide more active recreation.
But is that even the right time to bring it up?
Well, that's the time where people are asked to come in if they want to comment to a specific taxing authority. But by the time these hearings happen, there have been a lot of discussions
planning,
and workshops. And usually taxing authorities accept comments from the public earlier in the process. But this process is laid out and has to unfold in the way that is described in Florida law and the Florida statutes.
So explain that, because that's probably answers my next question is, why do we get it? Why not just get a tax bill in November?
Well, because our legislature at some point in time decided that in the interest of informing people what was happening to them and who was doing it, that they should get this notice because it separates the different taxing authorities one from another. For example, on the tax bill I'm looking at right here, there's one taxing authority that basically gets $1.47 of the tax bill, and there's another taxing authority that gets more than $500 of the tax bill. So this lets people know
how it's broken down.
Right.
And if there's any changes, maybe they weren't aware of that have been maybe progressively happening over months, and then that lets them know.
Sure, it lets them know that. What it provides them is a line for each taxing authority, and it tells them this is what was paid to that taxing authority last year. This is what would be paid to that taxing authority this year if their budget stayed exactly the same. Well, the amount they needed to fund stayed exactly the same. And in our county, we highlight the really relevant one. This is this year's proposed taxes based on the budget they've adopted so far, and that we highlight in yellow on our trim notices.
And we probably should remind the person listening that every year it's just like a budget that you would do for your house or anything else. It's done like on an annual basis. You know, there's hard costs that you guys have to pay to keep a county and a city and an entity running. And so, you know, someone has to get together the boards and the committees, and they conspire on all those things to make changes, improvements, and modify the budget accordingly. So when we come back in a minute, we're going to talk about what are some of those items on the tax bill and just give you a little bit of a description on where a few of those tax dollars are going. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. We're in studio today with Pam Dubov, Pinellas County Property Appraiser. We'll be back in just a minute. Hey, Katrina Madewell here. Just wanted to make sure you know how to reach us on our off-air number. If you'd like to connect with myself or any of our guests, you can call us at 813-377-2775. Again, this is Katrina Madewell, host of Tampa Home Talk, and to connect with myself or any guests we have on air, just call or text at 813-377-2775. 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darren T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darren T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves, so get MISH. 888-438-6474. Principal Office, Tampa.
Aaron Davis here, owner of Hillsborough Title, serving all of Tampa Bay. Our service, strength, and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
Welcome back. I'm your host, Katrina Madewell. You're listening to Tampa Home Talk. Thanks so much for joining us this week. If it's your first time ever catching the show, we will be here same time, same station next week. And we're here every week. All of our shows are available on a podcast. If you hop on over to tampahometalk.com, you can pull them from our site or any podcast player. If you're on iTunes, just hop on over to the podcast section and type in Tampa Home Talk. The show will come up in its entirety. We've got some great information today with regards to property tax collection and those notices that you get, the trim notices. And our guest in studio today is Pam Dubov. She's Pinellas County Property Appraiser, and talking about how those things come about. What is a trim notice? Why do you get them? And all those sort of things. And when we broke just a moment ago, we were talking about some of the different breakdowns that go on those those proposed property tax collection bills. So when you look at that, Pam, what's a general idea? Like some of those things, and again, there's a lot of different things, and I know that's probably a little bit outside of the scope of what you do with the property appraiser, but just in general, kind of run through what some of those things are and what that budget is for. And we'll post some stuff on Tampa Home Talk that give people more detailed information on this.
Okay. I won't break down all of them because, in fact, in Pinellas County, we have 56 different taxing authorities, and every trim notice doesn't have lines on it for every taxing authority. For example, I live in the East Lake area of Pinellas County, so I don't have information on my trim notice for the city of St. Petersburg or any of the cities. I live in an unincorporated
Well, they're
area.
going to be a little different based on that particular municipality's budget, right?
But the things everybody sees, taxes for the county, for public schools, and either for a city if they live within a city, or if they don't live within a city, they get what assessed for what we call the MSTU, which is just the Municipal Services Taxing Unit. Those are the services provided by the county that are municipal-like services that, if we were in a city, would otherwise be provided.
What type of stuff would that be, like a rec center
some
or
of the
playground
recreation
or something?
things, certain services that cities provide to the people, like their code enforcement and building permitting departments and things like that.
So some of those are hard costs you're going to have from pretty much every area is going to have that.
Of course, the other thing we see on everyone gets on their truth and millage notice is the levies for public schools, and there's two listed on a trim notice. One of them is the millage rate that's required, that the school board is told they have to levy at the state level, and the other one is the levy for schools that's decided by the local school board. We also have, we all, in this area, most of us are probably under the jurisdiction of Southwest Florida Water Management District,
Yes.
which provides some water management services, floodplain management services, but counties and cities also have a hand in that. And then here in Pinellas County, we have some independent districts that are peculiar to us that won't be found in other counties. There might be something like them in other counties, but for example, the Juvenile Welfare Board, which develops programs and oversees things for helping children, particularly children who are from areas that aren't real well-to-do, Early Learning Coalition, things that will help kids catch up and keep up in school.
And does that ever pertain to any type of I don't know, maybe kids under 18 that are breaking the law, like special programs to kind of put them back on track to make them productive parts of society?
I think that some of that, if you look at a trim notice, actually, there's a lot of entities that touch on those things. I mean, the Juvenile Welfare Board is certainly involved in that. But if you think about it, so is the Sheriff's Department,
right?
Probably, and the Sheriff's Department isn't listed on here as a taxing authority, just like I'm not.
Right.
Our budgets are funded largely through the county portion of this notice.
Right. And there's a lot of different things that would also appear on there, like even simple things like street lights, which a lot of people are going to take advantage of, and it costs money to run those things.
Well, yes and no.
No?
I mean, sometimes street lights are assessed through a homeowners association. They're not even part of this process at all.
Right.
At other times, some street lighting districts actually appear on the trim notice, but not on the top part of the notice that's really related to the property's value. It appears in a small section at the bottom of the notice called Proposed or Adopted Non-Ad Valorem Assessments. And the taxing authorities in the top part of the form and the property appraiser really don't have anything to do with determining those. I mean, for example, here on the notice I'm looking at, Pinellas County a few years ago adopted a surface water assessment to help manage stormwater runoff and the quality of water that's running into lakes and streams, because they have standards that they have to meet. And so that assessment is not dependent on the value of a property. So it's not like a real expensive Gulfront home pays more than a smaller home. There may be some break points in that assessment, but they're based more on the impervious area where water can't absorb into the ground on the property.
So to kind of break down the difference between ad valorem and non-ad valorem, real
Great
quick,
question.
what's the difference?
Ad valorem is actually Latin for based on value.
Okay.
It's the vast majority of the trim notice is based on, the taxes are assessed based on the value that our office the property appraiser's office determines by analyzing real estate market data. It's based on value. Non-ad valorem assessments, the reason they're non-ad valorem, they're not based on value.
Excellent. So it's funny how so many words in the English language actually derive from something, the Latin, context.
Right.
So also one of the things that you should know about, and I'm sure you probably get this a lot because we were talking about taxes being paid in arrears, the deadline to file for homestead exemption.
It's really important. You have to file for exemptions by March 1st with just a couple exceptions. I mean, even those exceptions, we have a special exemption in Florida for low-income seniors, and it's adopted in different amounts by different taxing authorities. And you have to apply by March 1st, but you don't have to submit your income information to prove that you qualify for it until June 1st. Well, that's really confusing. So we're very forgiving of people who miss the application deadline because they read the part about bringing their income information in June by June 1st. But in Florida, the exemption filing deadline is March 1st.
And that's for that year, right? The tax bill they're going to get in November?
That's right. And it's the important thing to remember, and I talk to people every year who miss that deadline, and they say, well, it's not convenient, I'm busy. In Pinellas County, you can file for homestead exemption online. You can file year-round. You don't have to wait till January of the year that you wish to start receiving the exemption. If you close on your house on February 15th of 2015, you can apply the next day for homestead exemption for 2016 already. So there's no reason to wait to the last minute. Procrastination doesn't get rewarded.
Now, is it still like they have to own the property by the end of the year to actually get homestead for that following year, right?
You have, just like whether a house exists or is complete or incomplete by January 1st, the ownership date is January 1st. And I mean, that is a hard and fast date. If you have an opportunity to close on a house on New Year's Eve, December 31st, or on January 2nd, if you want the homestead exemption, you better pick December 31st. Because if you closed on January 2nd, you are not going to get the homestead exemption
for
that,
that year. Yeah.
The whole year. And that's one of those do not pass go, do not collect 200. There's no exceptions to that rule. I mean, I am aware that there have been times when real estate closings have taken place on January 1st, so that ownership could be established January 1st. The deed doesn't have to be recorded by January 1st. It has to have been executed. Mm-hmm. Yes.
So executed transfer, basically move into the new one. Another key point to mention might be, what do they need in order to file? Because we get this a lot. We get a lot of people that move from other states. And so from what I know, it's a couple things, right, they need?
You need to bring your driver's license if you drive. We know that some people don't drive, so if you get a Florida ID instead, which some people who no longer drive go to get so they have a form of state identification, that will suffice. If you're a registered voter, you should bring your Florida voter ID card. You're not required to be a voter, but if you are a voter, it needs to be here in Florida that you're registered. Your car registration information. And in the old days, we used to say, well, bring a copy of your deed. Well, you really don't need to do that because deeds are recorded.
Online.
We get the information online.
So they need 2 or 3 things? Like, they don't have to be a registered voter, right? They can just provide their ID and their car tag?
But one thing you have to provide, and I know this really bothers some people, you must provide your Social Security number.
Okay.
And you must also provide the Social Security number of your spouse, even if the property is not listed in both of your names. And that's not negotiable. You don't provide the Social Security number, you do not get the homestead exemption.
Ouch, and that's $50,000 in some cases who want it.
The reason I bring that up is I know that here in Florida we become very sensitive to the fact that we have a wide open public records law. People can come into my office and they can ask for just about any document we have, copies of trim notices and all that. The Social Security number is an exception to that rule. So when you give that Social Security number to me, it is protected. It is not provided to anybody other than the State Department of Revenue, which oversees our tax roll.
Right, and even when things are recorded, they block it out as part of the privacy policy now. You're listening to Tampa Home Talk. We have to take a real quick break. When we come back in a few minutes, we're going to continue on with some of the other exemptions, and we're going to also talk about what happens when taxes go up and down and move all around. I'm your host, Katrina Maid. We'll be back in just a minute.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHometalk.com under Radio Show. What makes Silverton different? Products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing cost. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHometalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Aaron Davis here, owner of Hillsborough Title, serving all of Tampa Bay. Our service, strength, and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
You're buying a house. Congratulations. So while you're worrying about the paperwork, leave the moving part to us. We're Woody & Sons Moving Company, a Florida licensed and insured mover, and we offer same-day written estimates. Plus, no sneaky mileage, stairs, or additional stop fees. All we ask is that you check out our great ratings on Google and Angie's List, then go to woodyandsons.com to learn more. Whether you need a full-service pack and move or some extra hands, at Woody & Sons Moving Company, we move you.
Welcome back. I'm your host, Katrina Madewell, and you're listening to Tampa Home Talk. In studio today, we have Pam Dubov. She's with Pinellas County Property Appraiser, if I can spit it out correctly. Thanks again for sticking around with us after the break. We were continuing on. And if you missed any part of the show, hop on over to TampaHometalk.com. You can pull it there under radio or any podcast player. You can just pop it down there and download it, subscribe to our podcast feed, and you'll get all of our amazing shows every week, which we bring on excellent guests just like today to answer a lot of these frequently asked questions that we get. So today's frequently asked question was regarding the trim notices and then the property tax bills, the collections, and that kind of stuff, because this is the season when they come out and people are always asking questions, as they have been for your office right over the last couple of days and weeks.
It's kind of funny. When we mail the truth and millage notices out, we know we're going to have 2 days of just rock solid phone calls, and then it drops off. And it brings to mind, I'm glad you brought it up, because it brings to mind some of the common questions that we have. It's people who've lived in Florida for a long time, and they're used to getting trim notices every year. A lot of times they look at the top part of the form, see what their value did, toss it in the wastebasket.
Recycle it, hopefully.
Hopefully. But the calls we get the first few days are very often from people who've never received a trim notice before. They're new to Florida. This is different from anything they ever saw in Ohio or New York or New Jersey or wherever they came from, and they think it's crazy and it's confusing, and it really is confusing, which is why we send out with the truth and millage notice something that's labeled the trim guide. And honestly, I have to tell you, if people would just look at it for a few minutes, a lot of the common questions, there's a lot of information.
And actually read at least part of it, maybe a little.
There's information that will help you know about benefits that are offered in Florida, like the homestead exemption and when you have to apply. I mean, there's
it's actually labeled pretty well. I'm looking at it here with you. There's number, like each little section has a number, and that correlates to what you can find where on the tax bill.
That's it. Well, let's call it a trim notice because
Okay,
they'll get
sorry,
a tax
yes,
bill in
please,
November.
please correct me, trim notice.
Not to be bossy or anything.
No, you're right. You're right. It's a trim notice.
The
I
other
say
thing-
tax bill because you look at it and you go taxes, but yeah, trim notice.
The other common problem that people have, and there's just no good resolution to this. We talk to folks every year about this. In Florida, if you buy a house, let's say you bought a house in June of 2014. So in November of 2014, we're talking last year, you would have gotten a tax bill. And if the person you purchased the house from had a homestead exemption and had lived there a long time and had a big benefit from the Save Our Homes cap, the tax bill that you received in November of 2014 reflected that person's benefits and tax savings for things that you haven't yet built up or earned. So when you get your own trim notice the next year, now in your own name, suddenly that prior person's $2,000 tax bill jumped up to $6,000 because they had the $50,000 homestead exemption and they had a whole bunch of value saved from the Save Our Homes cap, and now you're starting all over. And that is an enormous shock to some people, and those are the folks we hear from. So if you're out there in the in the market to buy a home in Florida for the first time, and you're looking and you're trying to estimate what your taxes might be, do not make the assumption that the tax bill you will receive next year in 2016 will be the same as this year's taxpayers
And I think
paying.
people get confused about that, especially if they have a mortgage, because the lender is going to use last year's taxes because that's all they have to go on. So they're
Right.
going to base it on that tax bill. Sometimes they go down, sometimes they go up for various reasons, like you
Right.
mentioned.
Right.
And I've seen one. I had one, I told you, where the lady, actually her husband died active duty in the military, and her tax bill was like, I think it was like $6 for the non-ad valorem stuff.
Well,
And it varies from one tax and accounting to the next.
Well, the thing about it is exemptions that you're referring to for like disabled veterans and stuff, that has nothing to do at all with non-ad valorem assessments.
Okay.
Period. That's just property taxes. But what can happen is if you buy a house from somebody who had a total and permanent disability exemption,
Right.
that November you might actually get a tax bill of $0. Or you might get a tax bill that was only for a small non-ad valorem assessment because you're not saved from those. And then all of a
the
sudden,
next year-
the full value of the house. Yeah, that's true. In fact,
which is the point that I was trying to break.
Yeah,
So
sure, yeah,
yes.
there you go. Okay. The other thing that can happen, and it's sad when it happens, but I know that it does happen. There are certain things. There is a property tax discount for veterans over age 65 with a combat-related disability, and it can take a substantial portion of the tax bill and make it go away. But if that veteran passes away, the spouse does not get to keep it. So you have a situation where, typically it's a wife, although I know we have women veterans as well, but typically you have a wife, someone who's just become a widow, and then the tax bill comes the next year and her husband's discount has been removed. Now, we don't have thousands and thousands of people who receive that.
But it could happen. I could see where it would be a
right.
surprise to someone.
And there's a place on the trim notice below the listing of all the taxing authorities and the different millage rates. There is a section that talks specifically about the exemption that someone had, and it shows the exemptions that were on the property the prior year and the exemptions that are on in the current year. So if you see a giant increase in the current year, one of the first places I always draw my eyes is to see, is this somebody that had an exemption last year who no longer gets it, either because they're a new owner or because maybe the home they owned here, the home they're looking at is no longer their primary residence. Maybe they got a condo on the beach and that's where they want their primary residence now.
Right. Which we'll talk about the Save Our Homes exemption and the portability, which we didn't really touch on that yet. But one of the questions I wanted to ask before we forget, because I know people ask this, how does it work for your guys in the field? So the ones that are out there actually appraising the property, are they walking around the property? They just look at the front? Are they looking at permits? Like, how do you derive what the value will be? And how the heck did they get all that done in a short amount of time?
The answer is all the above. When a house is being constructed for the first time, our appraisers visit it more than one time. They look to see the structural frame, the elements, how it's being built. But for the vast majority of our houses that exist, they're already here. They've been on the tax roll. They were built in the 50s or 60s or 70s or 80s. We have a record that shows structural elements. What kind of exterior wall? What kind of roof cover? I mean, I can't look at a house, and neither can any of my appraisers, and say, well, we know it has extra insulation in the roof. I mean, we don't go up and look in the roof and things like that. We're doing what's called mass appraisal. It is not the same thing that is done when you have an independent fee appraiser come to your house to estimate the value for you for getting a loan or something like that.
Well, that's because your bank is lending $100,000+ usually, so they want to know what they're going to. More money is going to be tied up into that process.
But what we're doing here is, we're doing mass appraisal, and we're trying to estimate what a willing buyer would have paid a willing seller on January 1st of the year, based on the real estate market, for every single property in the county, all 432,000 of them, not just the ones that sold. So we do, first of all, when permits are pulled, we inspect permit work to see if it's adding something new or just maintaining something. If you get a new hot water heater, it's not going to make your value go up. If you replace your shingle roof with another shingle roof, we're not going to add for the shingle roof because you're replacing a like item that wore out with a new item. But if you build an addition on your home or you add a swimming pool, then that's going to add to your value above and beyond your Save Our Homes cap. So when we have permits, we go to the field and we look. But when we're just doing regular reviews, which are required once every 5 years on a property, we can actually do those reviews today using aerial imagery and oblique imagery, which lets us look at a house from 4 directions on an angle, so we can see if, has the open porch now been screened in? I mean, we can see that. Has a swimming pool been added? We can even see that from aerial imagery often, but on a pool permit, we'd usually go out.
So are your appraisers most of the time looking at stuff from this aerial imagery, or are they actually physically going out and inspecting the properties as much as they used to?
They're not going out as much as they used to. A little more than a decade ago, we were required to go out once every 3 years, physically inspect feet on the ground. That law was changed to once every 5 years, and then it was changed a couple years later to allow the use of aerial imagery. Where we can adequately see a property with the aerial imagery, we use that because it's a lot less expensive and labor intensive than sending someone in a vehicle.
Absolutely.
And gas and mileage and driving.
And hourly rates, it all adds up to expense.
Sure. So a lot of it had to do with cost-cutting measures. And I will tell you, in the old days when we went and inspected every property once every 3 years, we'd always hear from people, what a waste of my money. You come here every 3 years and I haven't done anything to my house. And there's some truth in that.
Yeah.
So it's a less expensive way, but it's a less perfect way.
Right.
You can always see more on the ground looking at a property. The other thing that's come up in recent years, the world's a dangerous place, and people are a lot more sensitive about folks walking around their house than they used to be. And my preference is for my appraisers not to go in someone's yard without that person's knowledge, but we work 8 to 5 just like the public does.
Right.
So what they're supposed to do when they go in the field is knock on the door to let anyone who might be there know why they're there. If nobody's home, they're supposed to leave a door hanger on the doorknob, who they are and why they were there, and then walk around the house. We confirm our measurements. We make sure that nothing's been added, that what we say a property has, like a swimming pool and a fireplace and those kind of things, are there. We don't go inside the houses to do inspections.
I'm sure they've been chased by dogs and all kinds of stuff, right?
All kinds of stuff. But the fact is, when we can do our work from the furthest distance possible, it's my preference. The public likes their privacy. I get that. I also want my appraisers to be safe.
Right. It's crazy for everybody because, you think that if there's a single female or somebody like me that's home alone, I might not know who this guy is or why he's walking around the yard. It might frighten them.
On the other hand, you know from the industry you work in, there's been stories lately about realtors who've been attacked showing someone one-on-one. I have appraisers. I don't really want them going in someone's house or being one-on-one with someone if it can be avoided. Having said that, we do have a duty to inspect property and keep the tax roll up to date, and we try to find the balance in doing that.
That makes sense. That's perfect. So one of the most important points that we'll probably talk about during the whole show is, what if you don't agree with the trim notice? What if there's a valuation on there that you're like, no way, no how? Like, what's the value on this one, just roughly, the one you're looking at?
Okay, here's what I hope you'll do. Now, this trim guide that we include with your trim notice that I asked you to read includes in a pale green column a section called Challenging Your Value or Exemption Status. We're telling you how to challenge us. The first option you have, and it's the best option because it's free, is to ask for an informal conference with my staff. And they'll talk with you, and sometimes we'll be able to show you that your impression of what the market is and what sales are is really not correct. We'll show you comparable sales. We'll show you the sales that are occurring in your area. On the other hand, you might be able to identify for us evidence or information that we weren't aware of. And I've told my appraisers, they've known for years, I mean, we don't need to defend our value to the death. That's not my role. I want to get the value right. Having said that, we can't do what everybody would like us to do. But if you can't resolve it with us, you have an opportunity to file a petition with the Value Adjustment Board. That's a board that's independent of my office. And the process for doing that is described right on this notice.
And does it usually go past that? Sometimes it can, right? Past those two places?
If you go through the Value Adjustment Board and you're not happy with the result of that board, then as a last resort, you can always file a lawsuit and sue me in circuit court. But hear me when I say this, I hope it doesn't come to that.
Yes, exactly. You're listening to Tampa Home Talk. We have to take a quick break. When we come back in a minute, we're going to use a couple actual examples and then just kind of hypothetical examples. And then we'll chime in on some other things that you guys see. Stick around. We'll be back in a minute to wrap up our show. Back in a minute. Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darren T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darren T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get MISH. 888-438-6474. Principal Office, Tampa.
Hey, welcome back. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell, and we are very happy to have in studio today Pam Dubov. She is the Pinellas County property appraiser, and we're talking about some of the things that go into the trim notice, the truth in millage, and what it stands for, what it means, and how it all works. And if you missed the earlier part of the show, definitely catch it in its entirety. We're getting to some of the meat and potatoes now, which are the things that people probably have, some of the really important things you need to know and the reason why those trim notices go out and such. So before we took a break, we were talking a little bit about how this comes out early. It's to give you an idea if the taxes may or may not change, what that would look like, if there's any exemptions that may go away that were on from the prior year. Because again, taxes are paid for the whole year that's already passed, and it's based on your appraisal January 1st.
Correct.
So let's say someone buys a home in December of last year. They pay $200,000 for this home, and then all of a sudden they get this trim notice that says, hey, we're valuing your home to be at $300,000, which probably doesn't happen that often because you guys are usually a little bit under the market value is what I'm seeing. But let's just say hypothetically someone has experienced this. Let's talk about what that might mean.
Okay, there's a couple things. If that happens to a person, there's a couple things we're going to ask about. First of all, what was the nature of the sale? Was this a short sale? Was this a bank that had taken a whole bunch of properties back in foreclosure and now they're just unloading them on the market? Or is the sales price, that $200,000 sale price, reflected of a willing buyer purchasing from a willing seller without duress and with full knowledge? So we're talking about a transaction. And let's assume that it was a willing buyer and a willing seller and it wasn't a bank foreclosure or a post-bank foreclosure sale, and we're that far apart.
Which normally, would that be where we would see that if it was a foreclosure or something?
Well, no, I can't even say that anymore because, quite honestly, the bank sales that are occurring nowadays, a lot of them are falling pretty close
They're
within
back
the
up to
range.
market value.
They're maybe not all the way, but they're a lot closer than they were. But what sometimes happens in a scenario like the hypothetical you described, where we're 50% higher than what someone paid. Often the property owner will come in and say, well, what you didn't know when I bought the house was that there were holes in drywall in 4 of the rooms, and there had been a roof leak that wasn't being cared for that started when people out of town. Here's photographs of the ceilings in these rooms that fell in.
We've seen people rip electrical through the walls and destroy it.
Here's copies of the repair bills, what it took for me to repair it, and if it's really, if they're really on the ball, here's pictures of the damage before we repaired it. Or they might say to us, it's still in that state. Let's say they didn't buy it in December, they bought it more recently.
Or, hey, there was a kitchen fire.
Sure.
Let me show you my melted cabinets.
And what we'll look for, the question I'll ask, if there was a kitchen fire, I'll say,
and you
okay.
can't see that from the stuff you're looking at.
But I will say, was the kitchen fire before or after January 1st? If it was after January 1st, that doesn't help you.
Right, which again, we're using the scenario, they bought it in December, so let's say they bought it like that.
If they bought it like that, one of the things, it's funny that you use the description of the kitchen fire, because if it was a fire that actually got reported to the fire department came out, we even try to get those reports so we know when there might be conditions like that on a house. But let's say we didn't know. We will work with a property owner to look at what their cost to repair the damage was, the assumptions that we didn't make. And the way we can do that is, for that year, since the damage still existed on January 1st, we can give that home an extra amount of depreciation to reflect the unrepaired or deferred maintenance. That's what we call it in our appraisal world. And then after the repair is over with, we'll remove that extra depreciation. And then maybe the $300,000 value is more appropriate. But that's not generally the person who comes in to call us. Generally, it's people who will say something more like, my value last year was $280 and now you're up to $470. How can it go up 40% in 1 year? The market is recovering. We were being very, very conservative when there was a flood of foreclosures on the market. The number of foreclosures have declined dramatically. Those are clearing the books. The market is improving. I'm not holding back, giving the market a chance to recover. And we have areas of this county, particularly on the waterfront, on the beaches, that are booming. And yes, values can go up that much in 1 year, and they just don't agree that it should.
And so this is a perfect time to segue into the Save Our Homes, because we were talking about that. So let's use the same example. We bought it in December. It was worth $200, or even a couple years ago, however that is, and now the value's $300. But let's say this is my primary residence. I filed homestead exemption on it, so I'm living here. It's my primary home. I'm getting a $50,000 exemption, and the value is up. Let's talk about how that's going to show on the tax bill and what it's going to look like.
Okay, on the top of the Truth and Millage notice, there's a place that it says there's columns labeled market value, assessed/capped value, and taxable value.
And that's where they would see the difference?
That's where they would see the difference. And we don't just say Save Our Homes cap anymore, because the Save Our Homes cap limits the increase in assessed, not market, but assessed value to 3% or the consumer price index, whichever is less. On non-homestead property, there is a cap of 10%. And on some properties, like a duplex, if you homestead half and you rent out the other half, you can actually have both caps in play.
Bill? Wow.
Sure. You get one tax bill, but the calculation is all commingled to get to these numbers.
It's divided up.
Yeah, it's part of the property gets one percentage of,
That's an
Save Our
excellent
Homes
point.
Oh yeah, it is. It doesn't happen often, but it does happen. So what people will look at, if you're in a home, and I'll have people that will say this all the time, well, my value shouldn't have gone up $100,000. Well, their market value went up $100,000, but with a Save Our Homes cap percentage this year, which is 0.8%, a lot of times their assessed value didn't go up hardly at all. So they say, I'm going to file an appeal, and I'm going to come in, and I'm going to make that special magistrate lower my market value by $50,000. And I say, and that's fine. You can go through that process, but at the end of the day, your assessed value is still going to go up 0.8%, and your taxable value and tax bill are still going to be the same.
Yeah, it's not going to change what you're getting taxed on if you've got that exemption.
So you need to pick your battle. The other question that comes up, people will say, "Hey, I thought I was supposed to have the Save Our Homes cap. My value went up more than the 0.8%. Why would that be?" And I'll look and say, "Well, you added a swimming pool this year." When you add things or we correct errors, like say we had mismeasured your house and had the whole upper story off of it, that gets added over the cap.
And will they ever retro that, or that's just going forward?
The answer is it depends. If you pulled a permit and we missed something, then you will not be back taxed for it. If it was our error, we had a permit, we should have known. But if you make an improvement without permits and we catch up with it and can tell from aerial photography when you did that, we can back tax. It doesn't happen that often. That's an exception,
Right.
not the rule.
Well, I was just saying, like you used the example, if you missed the upper story, if
Right.
that happened and it was always there was a permit,
It's going forward.
Okay.
Yeah.
And can you touch again real quick what you said regarding the CPI, and then what was the other thing for the Save Our Homes cap? Can you just...
Yeah. The Save Our Homes cap limit, first of all, when you apply for homestead exemption, the first year you get your homestead exemption in that property. Not the first year you get homesteaded in Florida. So if you move, like I have, 4 different houses in Pinellas County, each time you move, this process starts over. But the year that you
Excellent point.
the year that you get your homestead exemption on the property you're claiming it on sets your base value for Save Our Homes cap. In future years, your assessed value cannot increase more than the Consumer Price Index or 3%, whichever is less.
Okay.
Okay? If you
So
don't...
it's conservative, really, for the taxpayer, it sounds like.
It is conservative. When the market was declining, however, there was a downside of that. If your market value declines and you've been protected by the cap, your assessed value continues to go up by that 3% or Consumer Price Index until they meet.
I gotcha.
Now, that's not really a problem today, but it was a big issue for people 5 or 6 years ago.
We saw a lot of wacky things at that time.
Yeah, we did.
And I mean, for you guys, it was kind of smart, really. I think it was smart on the, for the tax collector and the property appraiser to mail out notices to see if people were still living there. Because really, you shouldn't be getting homestead exemption if you're not there.
Well, what happens with respect to that, every year in January, right after the first of the year, we mail out a homestead renewal notice to every person who has a homestead, and it pretty much says, and I'm paraphrasing, we are renewing your exemptions on this property, but if you no longer claim it as your primary residence, if you are renting it out, if you have gotten married and you and your spouse both had homesteads, you have to pick one per family unit. So we try to get people to pay attention to let us know when they no longer deserve homestead exemption. Because if you keep a homestead exemption that's no longer valid and we find out about it, you can be back taxed for up to 10 years.
Wow.
With 50% penalties and 15% a year interest.
Wow.
And I mean, people will own a home, they'll decide to rent it out because they've met the love of their life and they're going to move in with him or her. And, well, they don't own my house, so it's still my primary residence. If you rent out your homestead property,
Then you're not homesteading it anymore.
for more than 30 days, you've abandoned it for homestead purposes. It's really important.
Yeah, and and again, when you get those notices, you don't have to do anything if you're still living there.
If you're still living there, you don't have to do anything, but if you no longer qualify, you have the ability to tear off a portion of the card and send it back to us and tell us, please remove the homestead. And it really, as painful as that is, it's more painful to pay back taxes with penalties and interest.
That's the, what do you call it, the amnesty period or whatever that you get to basically tell the truth.
Yeah.
You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. Thank you so much, Pam Dubov, for joining us today.
Thanks for having me. It's been fun.
Pinellas County Property Appraiser did an excellent job explaining the trim notice and what to expect, as well as some of the other exemptions. If you have any other questions for us or Pam, go to TampaHomeTalk.com. You can catch us on Facebook or on Twitter. Just tweet us up at Tampa Home Talk or on our Facebook page. We'll be happy to get in touch with Pam and get those questions answered for you. Again, all of our shows are available on a podcast, and they're under TampaHomeTalk.com under radio. We will be back here same time, same place next week with another excellent show lined up for you. In the meantime, this week, we're out.